Taking care of some of the chores around the house, waiting for to see exactly how much fear they want to pump into the market and picking up some stuff. So anyway, let's get to it because this is 3 at 3. Bang. 3 at 3 is presented every day at approximately 3 p.m. Eastern Time. And we present what we see as unusual option activity. Calls that are bought in big blocks on the offer, or conversely, negatively, puts that are purchased on the offer in big block size. That is what we're looking for. That is what we have defined and what we call unusual option activity. Let's get to it, my friends. You want to get started? You've not traded before? I get it. It's kind of deep end stuff sometimes. Options seem like that. It's not that tough. You could do it. But if you want to help from people who have done it before and have helped thousands of other people learn about options, whether you're trading through Robinhood, E-Trade, TD Ameritrade, Fidelity, Interactive Brokers, doesn't matter. We can show you how to trade better, smarter. You go to marketrebellion.com/get started. Don't you wish you knew a little bit more about puts on a day like today? Well, we can teach you. marketrebellion.com/get started. Disclaimer is this is for informational and educational purposes only. And yeah, I thought this was apropos. Sometimes I wonder if all this is happening because I didn't forward that email to 10 people. Because remember what it said? If you don't forward this to 10 people, crap like today is going to happen. Crap like today, though, creates opportunities. Just ask Day Trader Dave Trading Global. Davey Day Trader Global. Check it out. This is how you do it, folks. Let's check out the cruise lines. Why? Because, well, just days ago we told you about all those puts that were bought in Norwegian cruise lines when the stock was 18 bucks a share. By the way, stock is now 15.85. It's been as low as 15.33. I am out officially of my puts in Norwegian cruise lines. Bang. So if you knew about puts and you knew how to trade, you might have done something similar when you saw a headline like this on Market Rebellion, which was that people were loading up last Friday on the 19 strike puts with a week to go. And they paid, let's say, between, let's make it easier. Let's say they paid between $1.30 and $1.70, you know, in rough terms, where the bulk of the volume was. So in other words, let's take the high end, $1.70. Okay, so you paid $170 per option to be short this stock at 19. And in the money, put trade, because the put is the right to sell. So the 19s, when the stock's trading 18.10, are worth 90 cents. So we bought those puts. You saw the headline here about the cruise lines plunging, as they say, sinking, as I might have written. There's where those puts are today. And no, I did not exit at 370. I wish I did. But I exited right around where they are now, the ones that I hadn't sold completely out of already, taking some profits. So just giving you guys an idea that some of these trades are puts, which increase in value as the stock drops, and some are calls, which increase in value as the stock goes up. Now, there's a contra to each of those, of course. You purchase a call and the stock doesn't go up, well, you're going to lose money. How much money? Well, again, you can truncate that, and I will show you how with a spread in just a moment. But let's get to today's 3 at 3. The first one is Bed Bath & Beyond, BBBY. I got to put this one out to Jeff Mackey, because Mackey's one of my friends that frequently comments on this particular retailer, Bed Bath & Beyond. We see bullish call buying today with stock at $9.31, which is pretty much a recent low. We see 4,200 of the Friday expiry 950 calls. So these calls are 20 cents out of the money, right? Right to buy it at 950 when the stock is down here at 931. differential, 19 cents, I rounded it up to 20, means that these are just out of the money calls. How much did they pay for them? 26 cents. Paid up to 41 cents. So that's $26 because every option's for 100 shares. Paid up to $41 since every option is for 100 shares. So a 10 lot of these would cost you $410. My dog loves that trade. A 10 lot would cost you $410. That would represent 1,000 shares of stock. A $4,100 investment would give me 10,000 share potential volume in here if I want to exercise them, which I don't have to because I can just trade out of these options as well. Now I have 2 days after today for this one to rebound and push through 950. Whoops, sorry, went the wrong direction. There's where it is now. Now, obviously, yesterday it was $10.40. Today it broke all the way down to $9 before rallying back to this 938, 950-ish area. So I like my odds here, folks. And that's why I bought the calls. I'll probably be in them, through tomorrow, Thursday, or if we pop early, I'd be out of them tomorrow too. But if we're rising, what I will do is I will take 50% off the table, and then I'll probably sell the 10s against the rest of it and put myself into a spread basically for free that if we trade between, because I will collect a premium for selling those 10s, if we rally to that direction. If we don't, I know my risk right now. My risk in this trade is 35 cents because that's what I paid for these options. They're already working for me. Keep an eye on it. All right, second trade of our 3 at 3. Oh, you want to learn more about trading options? Well, my brother and Pete and I have been trading for over 30 years. You can learn all about it by going to marketrebellion.com/get started. All right, let's get to it. CNX. CNX, they're buying the July 9 puts. So CNX, let me see where my fills are in here. CNX. It's a really weird day outside today. We get like a rainstorm and then sun, bright sun. Then a rainstorm, then bright sun. Go figure. All right. CNX Resources is trading $9.05. When we posted this, it was $9.09. Some of their competitors are like Peabody Energy, Cabot Oil and Gas, Range Resources. You get the idea. Why is that? That's because these guys are an independent oil and gas company. And we see people buying a bearish spread. What is that, John? A bearish spread means they bought the July 9 puts, which are literally at the money. And against that, they sold the July 8 puts. So that spread can go to a maximum of $1, the differential between these two strikes. They paid 66 cents for the one leg, which is their one that they own. They sold the other for 24. So in other words, 42 cents is what this is costing them. They could more than double their money, take it from 42 to a buck if this goes down to or through $8. You've got until July expiration, which is 4 weeks into the future, basically, 3 weeks and a couple days into the future. I am in these. I did not do the spread. I bought them naked because I thought they were cheap. There's the stock as it's breaking down. So far, I've given you 2 stocks in the 9s. Bed Bath & Beyond, trading $9.50, and CNX Resources, trading $9.05. 2 stocks in the 9s. Let's look at the next one. Is it in the 9s? Our third of our 3 at 3 is not in the 9s. It is Ions, I-O-N-S. And Ions, this one in the space that is one of the hot spaces in the market. Whoops, I-O-N-S. Show me my fills. Okay. So, pharmaceuticals. These guys, Ionis Pharmaceutical is higher by $1.34 right now. They basically are presenting at the BMO conference for prescriptions and so forth. This was one that was held just yesterday. People like what they hear, perhaps, because the stock opened at $57.97 and has traded up since then. They bought the October 70 calls. They paid, in one print, they bought them, 5,000 of them, basically from $2.20, and then they kept buying them up to $2.30. So that's $220 per option. Means a 10 lot is $2,200. Means a 10,000 share equivalent is $22,000. All right? Well, but do I really want to purchase something that's that far out of the money? Something that is basically, when this trade was established, $12 out of the money, because let's call the stock 58. Difference between 58 and 70 is $12. That's a bit of a jump. So what do I want to do? Well, here's the stock. There's the chart, just a 5-day chart. You see it looking like it wants to try to break to the upside here. This is what I did and what I am doing. Ions, I bought the 60 calls. Why? Because they're closer to the money. And I sold these, the 70 calls, the very ones that we see unusual activity in. Now, they're up 85% on the day, the ones I'm selling. The ones I'm buying are only up 14% because they're more of a surrogate for owning the stock. They're not the out-of-the-money lottery ticket. So, in this trade, paying $5.50 and selling these for $2.50, let's say, you've got $3 on the table. Or you could buy these naked for $2.60 and have $2.60 on the table. So in other words, I have more money at risk. But what have I done? I have addressed V for volatility, and I've addressed T for time decay, although I'll grant you that for an October option, these are not extremely fast decaying options. But I like addressing theta, which is time. I like addressing vega, which is volatility. And I put myself into this spread 1-to-1, paid $3. It can go to how much, folks? What's the difference between the 60 strike and the 70 strike? If you said $10, give yourself a cookie when you go home. You're right. It is $10. So I could turn $3 into $10. I like my odds. The stock is at the money and I've got time. And I could also, if time goes by and the stock drifts a little, I could buy back those out of the money 70s, and probably sell the 55s against it, and still be in that 1-to-1 spread. And maybe my at the money or now in the money calls have held on to most of their value. Stranger things have happened. So that's my 3 at 3 for today, folks. If you'd like to learn more about what we do at Market Rebellion, go to marketrebellion.com/UOA. That is marketrebellion.com. Unusual option activity. We abbreviate it UOA. Thank you for joining me here today. I hope you have a great day, and I look forward to joining you tomorrow. Make sure it's a good day, and we'll see you at the workout video tomorrow.